How's it going, traders? It's the Purple Wall Street back with another weekend review. Today, we're going to look at some of my top charts going into next week, as well as a few updates from previous weeks. Make sure to hit the like and subscribe button below so you can get these actionable trades as soon as they come out. And if you can, leave a comment down below. Let me know what you think about these chart videos and if you have any questions. Feel free to watch this on 1.25 or 1.5 if you feel I'm talking too slow. So let's dig into the charts. But before we do that, just wanted to make a side note. This coming Wednesday is going to be the FOMC meeting that we've all been waiting for. We are, of course, expecting that a 25-point rate hike increase will be announced. I know they've been waffling between 25-point and a 50-point rate hike. I think with what's been going on with the markets due to the war in Ukraine, it looks like 25 basis points is going to be the number with a target range of 4 more times this year for 25 points, totaling at 1 point or 100-point basis point rate hike. So I know they're looking for potentially originally looking for 7 over the next 12 months, but I just don't think that's going to fly with the way the market has been falling. So let's keep a close eye and see not only if we do get that 25-point rate hike, but also what Jerome Powell's testimony sounds like. If he's dovish, hawkish, let's wait for that, and we'll take it from there. So looking at the SPY, this is a daily chart. We do have an inbound death cross. That's when the 50 SMA, which is in blue, crosses under the 200 SMA, which is in red. You can see that we're pretty far extended below both moving averages. And we had a pretty nasty bearish engulfing candle on Friday. Bearish engulfing meaning that the open high and the close low were larger and or higher and shorter than the open high close low from the prior day. Generally a bearish signal, and so you would expect Monday we would have a lower close, or at the very least a lower open. So let's see if we can rebound from Friday's close. But ultimately, if the market continues to remain weak, then I'm still looking at my target zone between 397 and 410 in the next couple of weeks. Taking a look at the Qs, technology, very similar story. We actually dipped into my target zone back a couple of weeks ago. We rebounded, came back up, tested 350 and failed. And now we've been coming back down. We retested the 324.10 level 3 times here. We held on to it barely on Friday, but looking more likely we'll come back into this target zone. Watching for potentially a move back to test the COVID low anchored VWAP here, right at around 315. You could see RSI still in a downtrend line here, unable to recapture 50, so looking pretty weak. One sector to note, URA, this is uranium. So you can see some of the top holdings here. We did break out of a little bit of a range here over 2560 on Wednesday, back tested it Thursday and held, back tested it Friday and held. If we hold 2560, then you can take a look at some of these names. We'll take a look at one of these names next, CCJ. But we've got a breakout over RSI on 50. We're coming up to overbought territory, not quite there. We did have a small squeeze that kicked us off with this move. So keeping a close eye on uranium this coming week. So here's that CCJ company that I was talking about, which is a uranium play. You could see potential inverse head and shoulders here into $28. I think if we get a daily close over $28, then I think it's pretty safe to take this trade, keeping a pretty tight stop loss. First target is going to be 31.30. Second target is going to be 34.91. Next up is a chart review, ABBV. I'm doing these next charts all in alphabetical order, so there is no order of importance, just keeping things simple. So you can see back here, we had the cup and handle breakout, made a move right up to our 1618 extension, continue higher over to 138. That was where our next entry was. Now we're continuing to push even higher. We're holding over our 200% extension here at 148.07. If we continue to hold this level, then I would target my 2618 extension here at 154.20. You can see we back tested 50R and RSI. We also had a TTM squeeze fire off here. You can see what resulted in the move off of that squeeze firing. So ABBV looking really good, continuing higher. Next up, Antero Resources, ticker AR, put out two entries here. So on 221, break of 2170, we got that breakout. We had a false breakout up here. It came back down. Another couple of false breakouts here. And finally, last week or the week prior to last, we started to finally move higher. Slower into the 1618 extension, although holding over it. So if we continue to hold 2609, as mentioned in my second trade, then safe to take an entry. If we can hold that, then I think it's good. If we close under it, then I would just be very careful for a back test of 2379. If we do hold it, then 2862 and then 3271 would be my next targets on the upside. Next up is CMG. This is Chipotle. And on this here, you can see we had a lower low and a higher low on RSI. So lower low on price, higher low on RSI. That's positive divergence. We did fail at the declining 50 simple moving average on the daily chart here, also into a supply zone up above. However, if we do break that 50 and close over it, I'd be watching 1538. If we can get a close over 1538, then possible test of 1600, 1690, and then I would be targeting the 200 simple moving average here. I'm not putting a trade idea out on this just yet. I generally don't like taking trades under the 50 and the 200. It's generally the signal of a weaker stock, and these divergence plays also, even on the daily chart, they can resolve themselves. So guilty until proven innocent, but I wanted to point out that I am starting to see a bit more positive divergence plays on some of these tech stocks that have been crushed, like Shopify. It's another one I saw a positive divergence for a potential reversal to the upside, but that stock has just been obliterated. I mean, it's down more than 50% over the last few months. Okay, let's look at DE. This is Deere Company. So watching for a close over 400, you could see we tested it 3 times a few weeks ago. We tested it again last week. We failed. Wait for that daily close over 434 cents, and this could be a good trade up to 422 and then potentially 450. We did have a golden cross again before we talked about the death cross. This golden cross is when the 50 SMA, which is in blue, crosses back over the 200 SMA, which is in red. That's generally a bullish signal. Next up is FCX. This is Freeport-McMoRan. This is a copper play. We still are in this trade, 46.10. We did hit our first target, took a little off at 50.65, but we back tested the breakout entry and are holding. If we get a close under 46.10, we'll just close the trade out and we'll take it from there. But so far, this isn't a big high flyer. You could see it has a pretty tight range that it trades in. And so when you have this big move up, you see the flag, another big move up, you see the flag. So I'm watching, do we break the flag back to the upside, retest 50.65, and then over 50.65, then 56.22 would be my next target. Next up is LAC. This is Lithium America Corp. Let's see, we do have an entry that I had signaled on 311, break and hold of 29.50. We got rejected off of that level pretty close on Friday. And we also closed back under the 50 simple moving average. So just need a little patience. We're back inside the wedge here. And what I would just watch out for, again, if we get that break over 29.50, we do have a small level, 382 Fibonacci retracement at 29.96, $30 right above with a big round number. We're hovering around that 50 RSI. TTM squeeze did fire to the downside, but starting to kind of sling back up to the 0 line. And we do have earnings coming up in 2 weeks on 3/25. So just keep a close eye on that. Here's another copper play, Southern Copper Company. This is SCCO. You can see Golden Cross got us a nice move higher, starting to flag under 77.29. We're already in this over 65.87, which was right around our 382 retrace. So we actually broke that 618, which is generally your toughest Fibonacci retracement level, back to the upside. You could see how we came right into the 786. We back tested that 618 perfectly, bounced back up. I'll stay in this as long as we hold over the 618. If we close under the 618, I'll close the trade out, but I will be watching for strength through 77.29, targeting 83.43 to the upside. Next up is ZIM. This is a name that I've been watching for quite some time. It's a shipping company. And you could see we did get that entry over 74.59. It put the trade idea out on 3.6. It did get a failed breakout here, Finally got that breakout on Thursday. Continuation on Friday over that 1618 extension. So usually when you hold over that 1618 extension, my ultimate target is going to be at 2618 extension up here at 94.64. We will have an intermediate target of 82.25. Also, something I really liked, we have a TTM squeeze slingshot fired on Friday to the upside. Look at these bounces off of 50 RSI on the daily. Very, very bullish. And so just watching to see when we get into overbought territory, will we be at around this level? Can we sustain it? Will we need to pull back, consolidate a little more, and then ultimately watch to see if we can get back or get to that 94.64, which is our 2618 extension to the upside. And finally, last but not least, again in alphabetical order, this is X. This is U.S. Steel. Also, death cross back here. Didn't really sell too hard, but came right back up. We got our golden cross back on Friday. Look at the move off of the downtrend line here. Fast move right back up to the previous highs at 30.57. We broke out. We failed. Came back down. This was a gap down. Retested. Didn't even blink at this level, which gives me really good confidence that this is a pretty bullish move. Next day, which is on Thursday, big move up. Next day on Friday, another move up, but then failed to break over that 1272 extension, which is always my first target over that 100% prior high breakout. So watch for a move back through 33.98. If we can get a close over that, then I'd be targeting 38.31 to the upside. So those are some of the names that I'm looking at going into next week. I would again urge caution. We do have FOMC, as I mentioned, and you just don't know how that's going to affect the market. Now, the way I look at it is because the market has been falling, I feel like a quarter point or a 25-point rate increase is already baked into price. That's my opinion. That's what I think. If they come out and surprise and do a half point, I would fully expect the market to start to come down pretty hard. But looking right now, like I said, looking more likely that the 25-point rate hike is I would say better than average odds that that's what we get. But you just don't know, and you want to be prepared for the absolute worst, which could be that half point or 20 or 50-point rate increase. So good luck next week. As usual, I will be putting out my morning emails, and I did note on the weekend review email that I sent out yesterday, I'm going to go light on trade ideas this week, at least until after FOMC. It makes no sense to really be entering in swing trades right now when you have this really big event that everybody's been waiting for. So I do expect it to be pretty choppy this week. I do expect a lot of volatility. So just be mindful of that. Remember that there's well over 250 days that are tradable throughout the year. Taking a couple of days off and sitting on your hands couldn't hurt anybody. So, all right, let's wait for tomorrow. We'll see what we got, and we'll go from there. So good luck in the markets next week, and I will be back with you on Monday.